In this video, as part of the Candlestick School series, we're going to look at the Evening Star Candlestick trade. Stay tuned. Hey traders and investors, a very warm welcome to you. So, Evening Star, nice powerful reversal pattern that you would use to identify a potential short opportunity. Better on your higher time frame, so one for you swing traders, one for you investors potentially if you're looking to exit your long position, maybe initiate a short position to protect some of your portfolio. Traders, obviously, we're looking to go short if we see this, or of course exit our long swing trade. So let's have a look at it. Got some good examples for you guys, got some strategies to kind of where to use it and stuff like that. Most important thing, hopefully at the end of the video, you're going to go with some little ideas that you can implement yourself into your own trading. That's the main goal of all these videos. Right, let's get to it. So the actual textbook theory is you have a bullish candle on day one. You have a candle on day two that's got a very small body. Now you're allowed a kind of wick there, and that's the worst candle ever. Let me just draw it again. So we've got, I should do rectangle really, shouldn't I? We've got a candle on day one here. All right, there's your first day. The second day, your body is, very, very small. Okay, that's not too bad. The point is you've got bullish day one, a bit of indecision day two. Day three is where you get the confirmation that this is potentially a good evening star trade. You want to gap down below the low of this candle. Okay, so that candle there, you want to gap below it. Now, my drawing is awful. Let's look at a real world example. That's better. This is a nice one on Euro US dollar. Happened to occur, should I say, over the weekend. So we've got a gap. Very rare on the currency market because we don't have that gap, but it happened. Let's have a look at it. Let's zoom right in on it actually so we can see what's going on. Now with all these candlestick patterns, guys, we can be a little bit flexible. Some people are like, oh, you can't be flexible and stuff. I prefer to be flexible if other conditions are outweighing the fact that it's not a perfect setup. Sometimes you can be in a perfect condition, i.e. where is the trade relative to the rest of the market, what's caused it, all this stuff can outdo the fact that technically, it's 2 or 3 pips or 2 or 3 ticks or 20 ticks not quite setting up correctly. I think common sense prevails. You can go too far where you can't start becoming too flexible and taking everything, but of course I think there's got to be a little bit of a line there. Anyway, let's move on and look at this. Day one, good bullish candle, nice, good, strong, low to high, thick body candle. Day two, we've got a bit of a spike to the high side. Of course, that helps the cause, but really in the name of the Evening Star, we've got a small body. Now, sometimes people like to see it gapping up higher. Again, there's a textbook way and there's real world. Sometimes I think that you can adjust it. The important thing for me is the day three. That's the most important thing. How it sets up on day one and two. I want to see bullish, indecision, a bearish change in sentiment. That's really what I'm looking for with the Evening Star. How it happens, I've got a bit of flexibility. So day three, we gap below the close and we get a nice bearish candle. And what we're going to do is we go short on the close of that and we look to kind of run that for however long we have. Our stop will be above the high of the second day. So in this case, what we're at 121, close is like 1.195, whatever it may be. In this case, a bit of heat, but not a bad trade. Decent risk reward ratio, quite a nice chunk of profit from that trade. Okay, let's look at other examples. And actually, if you want to run it on, by all means, moving average, trailing stop, key level. One thing to point out, guys, if we are trading this at the end of an uptrend, okay, let's look at this euro here. We're trading at the end of an uptrend. I would be very careful about looking for home runs. If you're on the end of an uptrend and you see this Evening Star, you're kind of saying, okay, it's all right. It's a 3-day bearish move, or reality 1-day bearish move that's kind of set up over 3 days. How important is that relative to the whole big move we've had in the prior few weeks? Probably not that important. So I'd be very cautious about taking it when we're in an uptrend. If you are taking it, it'd be a hit and run type trade. However, as I mentioned before, with other kind of stuff, if we've got the wind behind us and we're in a downtrend, then we push up and we see it in that scenario. So it's a really short-term move against the overall bigger trend. Then we see the shooting star in that position. That's far more effective because then we can expect it to take out that low, we can expect it to continue. We're almost using it as a continuation, but a trend reversal within a smaller time frame or within a smaller kind of window. So that might be 2 or 3 weeks, for example, or a week worth of trade over multiple quarters of down move, pushes up, get that kind of evening star set up. That's the trigger we need. We're already bearish on it. Supply, demand, and balance has shifted back into the favor of the overall trend. That's always my preferred method of taking these kinds of trades, guys. All right, let's have a look at something else. One on here, Facebook, a losing trade on Facebook, but look how choppy this is. Look how within no man's land it is. And I love putting these examples up where we get losers, where we have, because I think the danger a lot of us do, and I, you know, hold my hands up and say done that, and we'll continue to be cautious of making these mistakes, is you zoom in. You kind of zoom in and go, oh, you know, there's my evening star. You know, we had a bullish thing, we had a bit of an indecision here, not much high. We gap really aggressively lower. We've got a really solid red. That's a beautiful bearish signal. Let me go short on the break of here or the close, and let me ride this. We're going to get $15 out of it. But when you zoom out and you put it in perspective, look at it. It's in the middle of nowhere. Nothing's happened. Very kind of mild uptrend, if not a range-bound market from that point after the earnings gap up. Sitting there, doing not a lot. Is that one you take? Maybe you would, but you know what? You've got to measure your expectations on it. No one's getting caught out. It's not taking out a high and sucked in some buyers and reverse like that. It's not kind of in an it's not kind of in an uptrend that's on a bigger downtrend. You know, the longer term positioning of it isn't that great. So this is why, you know, we have to look at the bigger picture when we're taking these. And I think the biggest mistake a lot of people make, like I say, myself included, is sometimes over analyzing the exact pattern and saying, yeah, but it's textbook. Yeah, but zoom out, look at the context of it. Who exactly is getting caught in that? Another one here on Tesla. This is again is not quite right because we hadn't gapped below day 2, unlike the euro example where we had gapped below the day 2 low. We've gapped lower, but we've got something that could be considered almost there. Bullish day 1, indecision day 2, bearish day 3, taking the short here, looking for a continuation. And obviously this one was quite a nice profitable trade. If it wasn't, your stop's going to be above that high, so you've got measured risk. Whatever you're doing, you've got measured risk. That's the key thing to this. So it's a decent trade, this, and actually you're on a broader uptrend, but you've pulled down. There's arguments for and against this, and you know, we could probably sit here and put bullish arguments for stuff and bearish arguments for stuff. The point is, if you're going to take the evening star trade, you know where your risk is. You know how much you're going to risk, so you can adjust your position size. You know the kind of quantify the risk. You know your potential reward. You've got a good idea of where you think it could go. You know the bigger picture. You can take them as much as you like, but as long as you measure the risk relative to the quality of the trade and the position of the evening star. If it's in a beautiful position, it's very nicely set up, you're in a downtrend, you're pulling back, you've got a bearish thesis on it already, you see that, you might want to pull the trigger with size. If it's not in a good position, but if it ticks most boxes, you might want to pull the trigger, but on kind of a quarter size, 10th size or something, and use it to build into the position. That's the beauty of trading. We can be flexible. We do want to keep our boundaries in place, and of course there's sometimes when you're just not going to take it at all, but you might still want to say, hey, you know what, I'll take that with some small size. Let me see if that gives me a little bit of a head start. Let me then add to it if we break some lows. Let me then add to it on pullbacks. Let me then add to it if I see kind of some more bearish patterns and just knocking the computer off. But you get the idea. So that's the evening star, guys. A decent reversal pattern, 3-day move, works very well on your 1 days, daily time frames. Works okay on your intradays. Obviously, you're not going to get that gap lower generally on the 3rd day, to be very, very specific with it. But if you see that, it might be worth paying attention and kind of looking and say, well, you know, is there an opportunity here? Have I kind of broken above a high? And the final thing before I go is, listen, if you're breaking above resistance, let's say that's a key level resistance. It's not on this example, but let's say it was, and you get that and it breaks back through, pay attention to that, because you've got double reason to take the trade. Fail, break high, and you've got that evening star. You can go on that. You can take your short position, have your stop above the high, and feel comfortable that even if you get stopped out, you take those enough times, they're going to work in your favor. All right, guys, that's the evening star trade. Take care, keep your risk managed. I'll see you in the next one. Bye bye.